Major funding for these broadcasts has been provided by grants from Madison Realty Capital, New York Community Bank, M&T Bank, AmTrust Title, Ariel Property Advisors, Customers Bank, Capital One Bank, Meridian Capital Group. Additional funding has been provided by grants from AVR Realty Company, Bank of America Merrill Lynch, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Real Estate Organization Handro Properties, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Castamatidis Red Apple Group, Kilroy Architectural Windows, Matone Group, Mercantile Bank, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Group, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, the Moynihan Organization, Moynihan Capital Partners, and these friends. Everybody is banking, and their banks have different challenges and opportunities in 2018. Some of the regulations have changed with the new enactment by the president, but what are the challenges and opportunities for these small regional banks? Today, I've assembled three prominent bankers to provide their insight on this. My guests include the market president, New York Metro, Washington, D.C., and Chicago, George Maroulis of Customers Bank, a $12 billion bank. Joseph Pistilli, who's the chairman of the board of First Central Savings Bank, a $700 million bank. And also the chairman of the board of Pistilli Realty. And last but not least, my favorite country banker, Joe Murphy, the president and CEO of Country Joe Bank. You're a $600 million?
$700 million. We were chartered 30 years ago. So we've been celebrating our 30th anniversary for the last, I guess, 7 or 8 months. I'm worn out.
What do you see that the opportunities and challenges for a $700 million bank competing with our friend Mr. Maroulis over here, competing with all the banks in the region? Why do they want to go to Country Joe?
They come to us because we're a grassroots bank. We know our community. We're very involved in our community.
What is your community when you say you're very involved?
You know, the community is a number of different things. It's not necessarily geographical. The community can be your educational community, religious community, philanthropic communities, as well as geographical communities. And so we participate in all of those things. We're very philanthropic in many ways and have been for a long time. Individually, my family has been very supportive of several educational institutions, of churches, hospitals, and things of that nature. So we participate that way, and that's how we develop.
But how do you get the niche in the restaurant and bar business, where many people, possibly the two banks over here, would not really be interested in that type of business?
We started lending to some of these people 30 years ago. We did have a terrific banker with us who helped us establish that market, a man by the name of Bill Burke. Rest in peace. He just left us, I guess, about a month ago. But a lifelong Irishman born overseas came to this country, got into banking. He joined our bank 25 years ago and helped us build that part of our market here in New York City, meaning the pub market, the Irish market, serving the Irish community. So I mentioned 3 or 4 different communities. The other, obviously, are ethnic type of communities as well.
Even though you're in the real estate business, you've been in the banking business going back over 25 years, Joe?
Yeah.
What are the challenges and the opportunities for a bank like First Central Savings Bank?
I think the opportunities are a lot like Joe had. The opportunities are still for banks that are small and community-minded, like First Central and Country Bank and other banks, including Customer Bank, are really set forth where you're able to lend to a community that's in need of the small banking, quick turnaround time. And I think that's the one aspect that probably both of us here, and I guess on George's side too, try to deliver that. I think the opportunity is really there. The challenge is always to keep your customer happy. It is a business at the end of the day. We do have a business to run. The challenges are no different on our side here than they are for Mr. Maroulis. His regulator is the same as ours, and the business is the same thing when it comes to the regulator. I think we put too much emphasis on that. I think building good, strong, successful business models that can be followed is what's
So
really
what would you say your business model is today?
Our business model really has always been lending in the real estate community, small business people in the communities. We've moved in the last 11, 12 months. We moved from a CD base where we've brought in business development officers that have come with business from other banks. We've brought them in, and our CD mix and deposit has really moved differently in a different direction. That also comes with being able to make certain loans that those businesses have and need. So I think that part has really changed us.
How do you promote yourself in the community?
A lot of them really goes from word of mouth, which is the best marketing tool we can have, keeping a good customer happy. And a lot of that really is coming from these new people that have joined the bank that are the business development people. They've brought business, they're out there, they're pounding the streets. People know them. They know they're able to turn things around. And they're very, very emotional about First Central Savings Bank. They themselves really feel that they're a part of a family bank.
How do you retain and make people want to be part of the family or remain over there? George?
So, Michael, we've been fortunate enough to retain our quality people. Our challenge is less on retainage, more so on finding new people. Our model is finding the top bankers in the marketplace that have relationships that they've built over many years, migrating these people, recruiting them actively into our family, and have them migrate their clients. The way we retain clients is through a proprietary single point of contact mini P&L model. What this does is aligns the interests of the banking groups with the interests of regulators, shareholders, management, and most importantly, the clients. So they participate in the success of their portfolio, and they participate on, if there's any challenge to any of the credits that they onboard. So this is, I would say, the primary driver of why we've kept our.
But how do small banks, okay, even 12 billion is not a small bank, how do small banks get new people, okay? People who are graduating, millennials don't say, I want to work for a small bank. It's not something they think of. They want to be in investment banking, they want to be in private equity, they want to be in other areas. They don't say, I want to be a commercial banker. How do you get that next crop?
Mike, I could just tell you, in a word, we participate in our communities. So we're involved in all of these different places.
No, it's getting the people. How do you get new people?
But we know them. We meet them. We're involved with schools. We're talking. We know the administrators. We're strong supporters to these different institutions throughout our various communities. And guess what? They come to us. My son's looking for a job. My daughter's looking for a job. Or we'll spread the word. We're looking. And so it's purely all grassroots type of efforts. And our family is very well known in our communities, and it's worked wonders for us.
Do you see that? I see it as a difficulty.
I think there's a part of that's true. I go back to, I believe, if you do a good job and you really can get a deal done that possibly it's much more difficult to get done somewhere else, that word of mouth really gets out there quickly. And to say that birds of a feather flock together, well, in business it does as well, whether it's the bar business or the restaurant business or different types of business, they do speak to one another.
But here's another
I
situation.
think, if I just may, there's also one other component that I think I may share a lot with Joe and also with George. If there's the need for, in my case, the chairman of the board, to meet with a customer and go out and see what they're doing, I do definitely get involved with that. I'm very much in tune with, I want to know how that person runs his business. But the second part of that is, and I think this makes, at least makes First Central somewhat different and unique, is that we as a bank and the ownership of this bank has built businesses. It has been successful in other businesses. So I know what it takes to make that business work. Even if I don't know that exact business, I know the suffering that that business went through. I also understand the needs of that business. And I know when they do not want to get caught up in a lot of things that, unfortunately, sometimes in the financial industry, you have no choice but to run a business.
But don't
that way,
we
'cause
have-
either they're bankable or they're not bankable. And
Okay.
that is key.
We have regulators who have always, since 2008 or even before, have been very cursory on the banks, okay? And they've been saying concentration of businesses, okay? But how do the regulators look at it that when you have that much concentration? Because they're saying, you know,
Concentration, Mike, is not the issue. It's a definition. It's a word. It's a process. Concentration is not the issue. It's the handling of the concentration.
Risk management.
What is the risk management involved? What risk management processes are involved in managing that concentration? What administration do you have in place to protect that? And what is plan B if something does happen in concentration? Because in concentration, yes, something can happen at a certain time. And what do you do when and if that happens? So it's answering and making them comfortable and showing them and convincing them that you have the proper policies and procedures and availability to correct whatever may happen at a certain time. That really is what the concentration issue is about. It's not how you have it or how much of it do you have. It really falls back to how do you deal with it if and when something were to happen.
what about capitalization?
It all falls under, I think, the category of proper risk management, which also includes retaining talent. So I just want to just go back to one of the things that we were all saying in a different way, and I think that we all do very well for retaining that talent, is provide work-life balance. So other financial services companies can't do what we do. People live and work in their communities. They put in their hours. They go home to their families. We're all part of the communities in which we serve. So I think work-life balance is the major difference that we could provide for, say, other financial services on Wall Street. Regarding capitalization, it all goes towards risk management. To Joe's point, I agree wholeheartedly. To Joe as well, it's properly managing the risk of the portfolio and being able to demonstrate that you have it under control.
But when you're growing, you need more capital. Isn't that a problem for small banks to gain, to capitalize? How do you recapitalize yourself, your bank?
We're in the process of researching a recapitalization right now for our bank.
There's a lot of alternatives available in the capital markets. I think that the regulators have made it easy by increasing the small bank threshold, holding company threshold. First, it was from 500 million to $1 billion. Now that with the recent legislation, it's gone from $1 billion to $3 billion, which means they consolidate the capital at the holding company and at the bank. It allows you to borrow, and that borrowing is treated as capital. And so I think that's a major mechanism available in the markets today.
I mean, you're publicly traded.
Yes.
Okay. Could you see in the next 5 years, okay, hypothetically, I don't want any trade secrets, that your bank becomes a publicly traded because it gives you additional capital, gives you opportunities to grow?
I'd like to say that the possibility exists. I think what's more important than running to become a publicly traded bank, and from my point of view, from where we stand today, being a $600 million bank, I would like the bank to be at a position where every opportunity is available to it, whether it wanted to grow organically, whether it wanted to purchase another institution, whether it wants to sell or merge or go public. So I think once the institution or a business is at that particular platform and place and time, that's what's the most important thing to make the best decision for it. Going public and having nothing to sell, it's not the best thing in the world to do, except having another regulator and another bunch of shareholders asking you
And a
what
higher
you're going to
audit
do with all the
bill.
money.
Right.
But
Exactly.
but the capital issue in our case here, where we are about to do a private equity capital raise, we're thinking about doing that. We're going out to people that we know, friends and family, who possibly want to be invited and join the bank and bring something different to the bank, bring different business opportunities to us. We're still at that level that we could be very attractive. It's not every day that people of a certain wealth or a certain desire to enhance their own personal portfolio and want to be involved from a resume point of view with a small bank. That's really the model that we come to.
And that's the approach we've taken also. We've done a couple of private placements in the last, 8 years, I say. Just small placements. You go to family, friends, clients, and so forth. And, they're generally happy to participate. They're excited. We pay a nice dividend on our stock. And I think that's attractive because it is provides a good yield. And plus, I think they get preferential treatment as customers of the bank.
We've been fortunate that capital markets have availed themselves to us in a number of different products. But what got us there, and I think the reason why we can all talk about raising capital in a way that we know it's going to get done is because we've executed in our business plan.
Yeah.
I think all of us here, share that. You do that, Mike, there's abundance of capital, ready to, to find its way to your door. The shortcoming, of course, is, have a quarter that's not as good as you would hope it to be, and next thing you know, you lose some equity.
That's beholden when you're a publicly held company. That every quarter, and then there's shareholders, and there are shareholder telephone calls, and there's analysts. It's a different world, and it can make and break a bank, okay? People are looking at certain banks and saying, why haven't they grown? So in addition to employees, where are the new opportunities? I mean, prior to the taping of the show, we were talking about both of you have recently entered the construction loan financing. Why do you enter into the, I'm not saying it's a bad market, but why do you feel today is an opportune time for a $12 billion bank and a $600 million bank to enter into construction? You're not really into the construction business.
We do we like to call it fixer-uppers.
But we're talking about construction.
We got into it because we're a relationship bank and some of our clients needed it. And over time, we realized that, we really need to have the right personnel managing that risk. So that's how we got into it. Our opportunities are all the opportunities that have been traditionally available to us, and that is, in my opinion, the money center banks, which I've spent many years at Bank of America and Citibank, where I think they do a poor job, and that is, you call a telephone number and it's that void of, prompts to get to a human being. And then if you need something else, you got to wait another, I don't know how many minutes to get to someone else. We provide good old-fashioned banking with a single point of contact. You know who your bankers are. They know who you are. We're active in the community. And this is really something that the larger institutions simply can't provide.
Can I add, it's funny, the first question I ask a new client coming in for whatever reason is, where do you bank? And 9 out of 10 times they mention some money center, super regional or whatever. And the next question is, why don't you talk to them? And I think both of you guys know the answer is that there's nobody to talk to.
But banking is changing, the large branches, you're not going to see a 12,000 square foot Chase Manhattan Bank branch anymore. Even TD Bank is reducing the number of stores, and the stores that they're continuing are being reduced in size to half size. If you ask a millennial, when was the last time they were in a bank branch, they'll say to you, what is a bank branch, okay? They get direct deposit, they know the ATM, and that's the world, okay? Now you operate even, interesting, you don't even have branches.
So we do have some branches, but they're few and far between. And the reason for that is because we take it a little bit further up on the service level. We bring the entire bank and all the services they provide directly to the client at their office or their homes. And we'll do it on weekends. We'll do it by appointment, what we call, or more accurately, what Jay Sadu calls concierge banking. He's the great visionary who said, hey, we'll never have a branch in every corner like some of these other guys, but we don't need to if we can provide that level of service directly to the client.
But getting back to my past question on the construction, you answered the question. Why have you recently entered in the construction market?
We entered the construction industry. One, I'm familiar with the construction industry from ground up and as well as the fixer-upper. So our board is familiar with that. Our board really is made up of people within the industry of one form or another. Pricing. There's really
opportunities for increased
in
profit.
Pricing for increased profit. Also, it is, and we will only do it the same way. I think George has kind of explained it the same way almost. We may have a little bit more flexibility in how we do it because we're dealing with that. We really want to build, and we have that relationship with the people. We have a compensating balance that needs to be kept with that, or a term balance that needs to be kept with that loan. That whole relationship, drawdowns and all the components that go with the construction project is at First Central Savings Bank. And I think that they speak from one to another to another. And I'm going to go to what Mr. Murphy said, which is absolutely right. Why are you coming to us? The answer is, my bank won't do the loan. Many of the times, our customers that we have today that are multi-million-dollar depositors, and they have multi-million-dollar operation accounts different places, are told that we don't make that kind of loan. We don't do that business.
Just if you don't mind, in a nutshell, I like to refer to their decisioning in these larger institutions as rules-based decisioning. So there's no one there that can make a judgment call that are outside the strictest interpretation of whatever rules they've established for lending, whatever it is, cash flow requirements, LTVs, or even just trying to get a loan closed.
Where do you see the opportunities over the next 5 years for each one of your institutions? Where do you see Customers Bank? Where do you see First Central in 5 years? And where do you see Country Bank when you celebrate your 35th anniversary, as opposed?
I'll start simply by saying that our organic growth has been about 10% a year. We don't need any new capital because our earnings are strong enough to not only sustain dividends that we pay out to our shareholders, but also sustain the capital growth to support our organic banking growth. I'm perfectly happy growing at 10% a year. I don't need to be a $5, $10, $20 billion bank.
Do you see yourself opening up more branches? Because you have
We
small
very
branches.
selectively look. We see a lot of opportunities. I was talking earlier that the city and just generally the geography in general is littered with empty bank branches. Just today in the New York Times, there was an article talking about repurposing the branches, restaurants using old vaults as freezer space. For us to be able to move into something like that, it's almost a plug and play type of situation. So it's a matter, from our perspective, it's establishing a new market in some community, whether it's in Westchester or in the boroughs or whatever. Those are the instances whereby we might consider a new branch. But branching is an expensive proposition. It's labor intensive, management intensive. And frankly, we do very well as we're doing right now.
Joe?
So we'll see.
I'm kind of flip-flopped on where the branch situation really is because I think it's like many other things in our life. At one time, the taxi medallions were the greatest things in New York City. Today, the council is voting on trying to save the life of the taxi driver or that job. And I only use that because the app, the telephone, has changed everything. It's changed our entire life. So I think where customers is kind of depending on that in some degree, in some way. We have mobile banking. We're not as big on it as George's company is. But I think a small operation like ours, the best branding it can have, I do believe this, by the way, is really a branch. how big, what size, how do you
I
really get it
agree.
into people's face? So if you're on Second Avenue and 59th Street, that's a great spot to be. I'm just using that as an example. And if you're in Astoria, 30th Avenue and 35th Street, that's the best spot you want to be, and so on and so forth. I still have always been dedicated to different ethnic groups. And I think that the new Americans coming to America need banking. They need banking that understands them, because they come with one big dream followed by tremendous fear.
The other day I was walking on 34th Street to 30th Street on 5th Avenue. And if you want to talk about Asian banks being concentrated, I saw 7 bank branches. It's over there. George, you, 5 years from now, where?
Well, the opportunity is just amazing. We build an infrastructure, Mike, that we realize that we can leverage and go and follow our clients as their businesses grow to some of the other primary markets throughout the United States. Loveleen Sadu's done an amazing job with Bank Mobile, attracted over 2.5 million customers through our Bank Mobile segment. Saving students $50 million a year, over $50 million a year in fees. So, we're really going to look at those customers, and we're going to help them along to the next stage of their lives. We're going to follow, what had made us very successful in New York Metro and leverage it to other markets, because our clients are going to these other markets.
So I'd say, if I take my crystal apple, where are the opportunities? I'd say there are opportunities for all 3 of your banks, and the banking opportunities are there for everyone. I think, but you have to seize the opportunity. There are going to be some challenges, but if you seize the opportunity and you stay in what you know well, and you continue and you have the right people, you do okay. I'd like to thank George, Joe, and Country Joe for being here, and I'll see you next week.
Thank you so
Michael.
much.